Hello, my name is Annie Blouin. I'm the Global Head of Relationship Manager and Client Services at BNP Paribas Securities Services Business. Welcome to this episode of our podcast series, Beyond the Trade, where we go behind the scenes to speak to our asset servicing experts and find out what's really important to our asset managers. In this episode, we're looking at the topic of fund distribution, diversification, and the new kinds of risk this presents for asset managers. As you know, diversification has always been an important topic in our world. But in recent years, the varieties of funds that managers are building and the way these are being distributed has changed massively. But what's less talked about is the new kinds of risk that this presents, and also how asset managers can build these products in a world full of risk, especially where the risks are part of the opportunity. As an example, when it comes to technology, it's really a fascinating topic and not an easy one. So I'm delighted to be joined by two of our experts from Luxembourg, Shani Vennen, Head of Institutional Investor Client Lines for Luxembourg, Ireland, and the Channel Island, and Munir Zahraoui, Head of Operational Risk Management. So let's start with you, Shani. First of all, thank you so much for joining me today. So Shani, you're responsible for strategy and product development in some of the biggest fund domiciles in Europe. You've seen the growth of cross-border distribution in the last 20 years. So in your view, what is changing now?
Thank you, Annie. As you know, my role is looking after strategy, making sure that we bring to market the right solutions for institutional investors in the region. And Luxembourg and Ireland, in particular, are the biggest fund domicile in Europe and now represent 60% of European cross-border assets. These two financial hubs have been leading the way in fund structuring and innovation. But what's really driving the momentum today? It's quite simple. Asset manager always wants to distribute more. It's about reaching new markets, attracting new investor segments, and creating more tailored investment solutions. So in that sense, Luxembourg and Ireland offer the infrastructure, the regulatory framework, and cross-border efficiency that make large-scale distribution possible. But here, what's really interesting is we used to have a conversation about fund structuring, fund plumbing, pure connectivity, and that conversation has now evolved into a much more strategic discussion. There is an increasing focus on diversifying into less traditional product types, including alternatives, active ETF, tokenized funds, blockchain-based distribution models, just to capture market flows. And the focus is now shifting from how funds are built to why they are built. And clients want to understand how we can support them in this evolving ecosystem where speed to market is key, from ideation to launching. These are the current discussions we have now with our clients and prospects. Clients would typically ask questions around data, how it is disseminated, how it is integrated into their ecosystem with their front office for reporting, analytic purposes. Technology is also a core question, and they want to look at it more holistically as building blocks to ensure efficiency and optimization on the overall operating model. Finally, the digital asset is raising quite interesting question, rather more to understand the shift of responsibility in the value chain between them and us, for example, around the cash management. And they want to understand where is the efficiency in implementing this type of technology.
Thanks, Shani. So what challenges does this bring up? What are the areas that asset managers need to consider more closely when designing or distributing these products?
So today, asset managers need more than just operational support from their custodian. They need a true partner who understands their product strategy, anticipate regulatory changes, and provide proactive solutions. But why? According to a recent survey by Alpha, 50% of product functions say that capacity to deliver products is a major pain point. And what's more interesting is that only 29% have dedicated transformation budget to support their desired people, process, technology, and data changes across their organization. This is something we really see. Clients are coming to us needing that infrastructure, expertise, and sometimes a different way of looking at their operating model to work out how they can deliver this type of new or emerging funds and where their gaps are to deliver them. So concretely, when asset manager build new type of products, whether it is an ETF, a hybrid fund, or a tokenized vehicle, they face big challenges, such as infrastructure. Legacy systems weren't built for daily ETF flows or illiquid private assets. You need new tool, data model, and integrations. Reporting. Investors and regulators expect transparency, daily for ETF and more complex disclosure for hybrid or private product, for example. Expertise. You need trading and capital market know-how for ETFs, structuring deals for hybrid, and tech talent even for tokenized assets. And finally, regulation. Each product comes with its own compliance issues, especially across border. So it's not just about launching something new, it's about rethinking the entire value chain in which we as custodians are part of. And in that context, we must as well evolve also beyond just execution. In today's rapidly evolving landscape, a strong custodian doesn't just protect assets, they enable growth, foster innovation, and drive efficiency, all while ensuring stability and security. So risk management is a key differentiator that asset manager in this new complex landscape seek in their business partner.
Okay, that's really interesting, Shani. And I think that brings us nicely onto you, Munir, as our risk expert. So, in this new, complex, but innovative world, what are the key areas of risk that asset managers need to focus on? Would you agree that this risk management is becoming more important?
Thank you, Annie. As regional head of operational risk management for several European countries, I wouldn't say that the risk management is becoming more important, as it always was and is a critical component of our industry. This being said, it is true that today, with the diversification of the products offering, we see a diversification of the risk profile our clients and banks are exposed to. This evolution of the risk profile is clearly part of the discussion we are having at the various country level executive committees. While discussing those issues, we see three main drivers that are driving this change. The first one, increased market complexity with the diversification across asset classes, geographies, and investment structures. As pointed out by Shani, the risk landscape has become more complex. Secondly, the pace of regulatory changes, which continues to accelerate globally, requires all stakeholders to adapt quickly while ensuring compliance and operational resilience. Think about DORA, MiCA, data privacy, etc. Finally, emerging risks, even though they are not anymore considered as new risks, still emerging. Those are the cyber threats, geopolitical instabilities, climate-related financial risk, which are now key concerns. Evolving risks demand a proactive and forward-looking approach to risk management. A good recent example, I have contributed to the risk assessment of the European Central Bank's experimentation program on wholesale bank money, for which BNP was acting as a DLT, distributed ledger technology participant, and DLT operator. One of the key learnings from this trial is that devil is in the details. It's crucial to deeply understand the new solutions, products, and processes which are directly and indirectly impacted to identify potential weaknesses, especially hidden manual tasks that can occur along the chain.
Okay, so clearly, asset managers are having to deal with the new types of risk brought about by changing market conditions, but also the risk brought by new technology. There's also the risk embedded in the actual design and the operation of those more complex funds. So, how can custodian or the asset servicer support clients with these?
That's a great question, Annie. And this is really where custodian and asset servicer provide value, helping clients turn risk into a strategic advantage. For this, though, it is key to focus on several aspects, I believe. The first one, augmented risk monitoring and control. We are seeing a big shift towards AI-driven risk detection, fraud prevention, and operational resilience. Industry players are leveraging AI and automation to enhance monitoring. Think fraud detection tools like Actimize. The hybrid funds you mentioned, Shani, is also a good example, as alternative and traditional investment have different infrastructure, different processing rules. Consequently, we need to develop sometimes more bespoke processes, which means that risks are more diverse. With that, we need to ensure that our risk management framework detect those risky processes by reviewing in detail the setup proposal and giving blocking or non-blocking conditions to secure our client activities before go live. A second element will be regulatory expertise and support. Global custodians have the advantage of their local presence in multiple markets. This definitely helps clients staying ahead of regulatory changes and implement best practices in compliance and risk mitigation. Those players are also participating to regulators' initiative to test and improve the framework and regulation. For example, we are part of many boards and working groups for industry association and market infrastructure globally. And we were involved in the revision of important fund regulations such as EMIR, IFMD, and MiFID II. This is really important in terms of improving practices and mitigating future risks that may arise when these regulations come into force or are updated. Finally, as you said, Shani, asset managers need a true partner who understands their product strategy. It makes it even more important that we have teams, people without just pure risk management experience, but bringing in people with investment experience who understand investment processes. And in fact, it is sometimes easier to onboard someone who has previous industry experience in the fund or investment world, more so than purely risk management experience. This is where I think we, as the asset manager's partner, need to adapt our people strategy and approach to human capital to adapt to these new processes and new risks. At the same time, I think many clients are also having to adapt their teams and upskill their people in new product types, asset classes, and so on. So we are all going through the same thing together.
Shani and Munir, thank you so much for your insights. I guess the takeaway is that clearly asset managers are innovating and embracing new product types, also new ways to reach investor, but it's important that they work closely with their partners to manage also the new type of risk.
Thank you, Annie.
Thank you, Annie.
So this has been Beyond the Trade podcast, and do stay tuned for more episodes soon. Thank you very much.
The information contained within this recording is believed to be reliable, but BNP Paribas does not warrant its completeness or accuracy. Opinions and estimates contained herein constitute BNP Paribas' judgment and are subject to change without notice. BNP Paribas and its subsidiaries shall not be liable for any errors, omissions, or opinions contained within this recording. This material is not intended as an offer or solicitation for the purchase or sale of any financial instrument. For the avoidance of doubt, any information contained within this recording will not form an agreement between parties. Additional information is available on request.